So the question we want to answer in this video is, why did Tesla fall about 4.5% or $16 on Friday? Well, it just wasn't Tesla, it was the entire market. Now, to put things in perspective, let's scroll out to the weekly chart. And since the Trump pivot, price went as high as 100%. However, the pullback is now 30%. So we could see this is shaping up to typically just be a impulse move, pullback before the next impulse move. Now, before we look at a key critical level, stay tuned to the end. Let's actually look into why Tesla fell on Friday. So the market sold off intensely on Friday due to concerns about the consumer. Early in the week, we had Walmart, a proxy for the consumer, issue weaker than expected guidance. Then we had the release of the University of Michigan's Consumer Sentiment Index. January, the index dropped 10% to 64.7, and that was a bigger decline than expected. Consumers' 5-year expectation for inflation came in at 3.5%, the highest since 1995. So this is putting some strain on the discretionary income of consumers. Now, in specific Tesla news, the company recalled 375,000 of its vehicles. The National Highway Traffic Safety Administration attributed the recall to steering issues in some Model 3 and Model Y vehicles from 2023 operating an older software version. Now, this is good because this means that it's just a software upgrade versus potentially a mechanical upgrade in which the cars have to come in for servicing. Tesla has struggled in 2025, but outperformed overall since Donald Trump won the election, again known as the Trump pivot. Analysts, however, are split on the stock. Longtime bull and Wedbush analyst Dan Ives recently reiterated his outperform rating, citing key catalysts such as new vehicle launches on the horizon. Meanwhile, you have an analyst by the name of Gordon Johnson of JLH Research sees a potentially disastrous upcoming quarter, with sales in the quarter of 2025 down significantly in China and in several European countries. All right. So again, this can just be the pullback, which is 30% down, before the next impulse move higher, which could be another 100% higher. Now, again, this is the weekly chart. We're going to have to go down to the daily chart. And as you can see, price did revisit this level back in early February. It did react, but it wasn't a strong reaction. Now price finds itself back at a level where price found bulls at about that $330 level. And the reason for this pink box nested within this weekly box or rectangle, if we scroll down to the 4-hour chart, this was the candle in control. And typically when prices close above the high of the candle in close, prices tend to move higher. And if prices fall below the low of the candle in control, prices fall lower. Now, what is the next candle in control? We're going to move that to this candle right here. And we're just going to say that price closed at the lower end of the range. Again, if price closes below, price may move down, only to potentially form a double bottom, potentially. Only time will tell. We could see the makings of a W pattern. It really all depends. Let's scroll back out to the daily chart one more time. We're going to see this on the monthly chart. Now, what I'm really eyeing is this $300 round psychological number. That was the shoulders of the head and shoulder pattern that was established back in 2021 and 2022. And so if price breaches the weekly buy, your next level of support is going to be down at $300. Thanks for watching. Subscribe. Please like the video.